stop everything you're doing right now because major Social Security changes just went into effect that could either put more money in your pocket or cost you thousands if you're not prepared. This isn't clickbait, this is real, and you need to know what's happening. Starting in January 2025, beneficiaries saw a 2.5% cost of living adjustment, meaning the average retirement benefit increased to around $1,276 per month. But here's the catch most people miss. If you're working while collecting benefits and you're under full retirement age, you'll lose $1 in benefits for every $2 you earn over $23,400. That earnings limit just changed, and thousands of retirees are getting blindsided. But wait, there's more. If you're a teacher, firefighter, police officer, or any public employee who was penalized by the Windfall Elimination provision or government pension offset, the Social Security Fairness Act just repealed those penalties entirely. This means you could be owed thousands in retroactive payments going back to January 2024, plus your monthly benefits could increase by $360 to over $1,000 per month depending on your situation. The Social Security Administration is automatically processing these adjustments, but you need to make sure your information is up to date. Here's what you need to do immediately. Log into your mySocialSecurity account, verify your contact information, and direct deposit details are current. Check your earnings record for accuracy. And if you were affected by WEP or GPO but never applied for spousal or survivor benefits because of those penalties, you need to apply now. Don't let confusion cost you money. Hit that like button if this information helped you, and let's make sure everyone gets the benefits they've earned. Script, 2,000 words. Now let's break this down step by step because there's a lot to unpack here, and I want to make sure you understand exactly how these changes affect you personally. The Social Security Administration doesn't always make this information easy to find, and honestly, that's part of the problem. Too many people are missing out on benefits they're entitled to simply because they don't know where to look or what questions to ask. Let's start with the cost of living adjustment, because this is the change that affects literally every single Social Security beneficiary in the country. The 2.5% increase might not sound like much when you first hear it, but when you're living on a fixed income, every single dollar matters. For the average retiree receiving around $1,927 per month in 2024, this bump brings them up to about $1,176 per month in 2025. That's an extra $49 a month, which translates to nearly $600 over the course of the year. Now I know some of you are thinking that's not enough to keep up with the actual cost of living, and you're absolutely right to be concerned about that. Inflation has been hitting everyone hard, especially when it comes to groceries, utilities, and healthcare costs. But here's what you need to understand about how the Social Security Administration calculates this adjustment. They use something called the Consumer Price Index for urban wage earners and clerical workers, and they look at the data from the third quarter of each year. The calculation is based on comparing inflation from one year to the next, and while 2.5% is lower than the adjustments we saw in recent years when inflation was running really hot, it's still designed to help your benefits maintain their purchasing power. The problem is that many retirees feel like the things they actually spend money on, prescription drugs, medical care, housing costs, are increasing faster than the general inflation rate that Social Security uses for these calculations. Now let's talk about something that catches a lot of people completely off guard, and that's the earnings limit. If you're under your full retirement age and you're still working while collecting Social Security benefits, you need to pay very close attention to this. The earnings limit for 2025 has increased to $23,400 per year. What this means in practical terms is that if you earn more than that amount from wages or self-employment, the Social Security Administration is going to withhold $1 in benefits for every $2 you earn above that threshold. Let me give you a real example so this makes sense. Let's say you're 64 years old. You're collecting Social Security benefits, and you're also working a part-time job where you earn $30,000 in 2025. You've exceeded the earnings limit by $6,600, which means Social Security is going to withhold $3,300 from your benefits over the course of the year. Now, here's where people get really frustrated and confused. They feel like they're being penalized for working, and in the short term, that's exactly what it feels like. But the Social Security Administration will tell you that this isn't actually a penalty. It's more like a temporary reduction. Once you reach your full retirement age, your monthly benefit amount gets recalculated to account for the months when benefits were withheld, and your payment goes up permanently to reflect that. So theoretically, you're not losing that money forever, you're just getting it later. But let's be honest, if you need that money now to pay your bills and cover your expenses, knowing that you'll get credit for it later doesn't really help you in the moment. There's also a special rule that applies in the year you reach full retirement age, and this is actually more generous than the regular earnings limit. In the months before you hit full retirement age, you can earn up to $62,160 in 2025, and the withholding rate is different too. Instead of losing $1 for every $2 over the limit, you only lose $1 for every $3 you earn above that higher threshold. And once you actually reach your full retirement age, the earnings limit disappears completely. You can earn as much as you want from working, and it won't affect your Social Security benefits at all. The key thing you need to do right now is log into your mySocialSecurity account and make sure your earnings are being reported accurately. If you're self-employed, or if your income varies throughout the year, you might want to estimate your annual earnings and report that to Social Security, so they can adjust your monthly benefit payments accordingly. The worst thing that can happen is that you receive too much in benefits during the year because you underestimated your earnings, and then Social Security comes back later and tells you that you were overpaid and you have to pay that money back. Trust me, you do not want to deal with that situation. Now let's talk about what is honestly the biggest and most exciting change for hundreds of thousands of people, and that's the repeal of the Windfall elimination provision and the government pension offset. If you've never heard of these provisions before, consider yourself lucky, because they've been absolutely devastating for public sector workers for decades. Let me explain what these rules did and why their repeal is such a massive deal. The Windfall elimination provision affected people who worked in jobs where they didn't pay Social Security taxes, typically government employees, teachers, firefighters, and police officers who were covered by their own pension systems instead. If you worked in one of these jobs and also had other employment where you did pay into Social Security, WEP would reduce your Social Security benefit by a formula that was supposedly designed to prevent you from getting a windfall. But in reality, what it did was severely penalize people who had worked hard in multiple careers and paid into Social Security for years. Some people saw their Social Security benefits reduced by several $100s per month, even though they had legitimately earned those benefits through their work in the private sector. The government pension offset was even more harsh in many ways. This rule affected people who received a pension from government work and who were also eligible for Social Security spousal or survivor benefits. GPO would reduce your spousal or survivor benefit by 2/3 of your government pension amount. For many people, especially widows and widowers, this meant their Social Security survivor benefit was completely wiped out. Imagine losing your spouse and then finding out that you're not going to receive any of their Social Security benefits to help you get by, simply because you have your own pension from years of teaching or public service. It was cruel, and it pushed a lot of people into financial hardship during what was already the most difficult time of their lives. Congress finally passed the Social Security Fairness Act, and it officially repealed both WEP and GPO effective January 2024. Now here's what this means for you if you were affected by either of these provisions. First of all, if you're currently receiving Social Security benefits that have been reduced by WEP or GPO, your benefit amount is going to increase automatically. The Social Security Administration has said they're processing these adjustments, and most people should see their increased payments starting in early 2025, with retroactive payments going back to January 2024. Depending on how much your benefits were being reduced, you could see your monthly check increase by anywhere from a few $100s to over $1,000 per month. And on top of that, you're going to receive a lump sum payment covering all the months from January 2024 through the end of 2024, where you should have been receiving the higher amount. But here's something really important that a lot of people don't realize. If you were affected by GPO and you never bothered to apply for spousal or survivor benefits because you knew they would be completely offset by your pension, you need to apply now. The Social Security Administration cannot automatically give you benefits you never applied for. So if you're a widow or widower and you were previously ineligible for survivor benefits because of GPO, you need to contact Social Security immediately and file an application. The same goes for spousal benefits. Don't assume this is going to happen automatically because it won't. Let me also address something that's causing a lot of confusion out there. Some people are worried that the repeal of WEP and GPO is going to somehow hurt Social Security's long-term financial situation and make the trust fund run out of money sooner. While it's true that repealing these provisions will cost the Social Security system additional money each year, we're talking about restoring benefits to people who earned them through their work and their contributions. These are not handouts or new benefits being created out of thin air. These are people who paid into Social Security, sometimes for decades, and who were being unfairly penalized by rules that never should have existed in the first place. Now, I want to talk about something that doesn't get nearly enough attention, and that's the importance of keeping your information current with the Social Security Administration. I cannot stress this enough. You need to have an active mySocialSecurity account, and you need to check it regularly to make sure everything is accurate. Your earnings record needs to be correct because that's what your benefit calculation is based on. Your address needs to be current so you receive important notices from Social Security. Your direct deposit information needs to be accurate so your payments go to the right account. And your tax withholding elections need to reflect what you actually want. Speaking of tax withholding, this is something that surprises a lot of new retirees. Yes, Social Security benefits can be taxable depending on your total income. If you're single and your combined income is more than $25,000, or if you're married filing jointly and your combined income exceeds $32,000, then a portion of your Social Security benefits will be subject to federal income tax. You can have federal taxes withheld from your Social Security payments automatically, and you do this through your mySocialSecurity account, or by filing a Form W-4V with Social Security. A lot of people don't realize they need to do this, and then they end up owing taxes at the end of the year, and they're shocked because they thought Social Security benefits weren't taxed. Let me also mention something about Medicare, because this ties into Social Security in important ways. If you're receiving Social Security benefits and you're enrolled in Medicare, your Medicare Part B and Part D premiums are automatically deducted from your Social Security payment each month. For 2025, the standard Part B premium is $185 per month, which is actually a slight increase from 2024. This means that even though you're getting a 2.5% cost of living adjustment to your Social Security benefit, a portion of that increase is immediately eaten up by the higher Medicare premium. This is something called the hold harmless provision, which protects most Social Security beneficiaries from having their net payment decrease when Medicare premiums go up, but it doesn't apply to everyone. There's one more critical thing I need to tell you about, and that's scams. Social Security scams have become incredibly sophisticated, and criminals are constantly coming up with new ways to steal people's benefits and personal information. You need to know that Social Security will never call you and threaten to suspend your benefits or demand immediate payment. They will never ask you to pay with gift cards or wire transfers or cryptocurrency. They will never ask you for your full Social Security number over the phone if they initiated the call. If someone contacts you claiming to be from Social Security and anything about the interaction feels off or makes you uncomfortable, hang up immediately and call Social Security's official phone number yourself to verify whether the contact was legitimate. The bottom line is this: the changes happening right now with Social Security are significant, and they require you to take action to make sure you're getting everything you're entitled to. Whether it's understanding how the earnings limit affects your situation, making sure you receive your increased benefits from the repeal of WEP and GPO, or simply keeping your account information up to date, you cannot afford to be passive about this. Social Security is probably one of your most important sources of income in retirement, and you need to protect it and maximize it every way you can. Take the time right now to log into your mySocialSecurity account, review your information, and if anything looks wrong or if you have questions, Don't hesitate to contact Social Security directly or speak with a qualified financial advisor who can help you navigate these changes and make the best decisions for your specific situation.